Welcome to TradeTheMBI.com. This is John. This report is for the 25th, and well, we're still having rising shakeup, but getting to that little bit of a warning sign here. The interesting thing about it is normally we look for this setup with a crossover moving lower of the green, meaning midterm buyers below, long-term buyers here, and we have just the opposite. At the same time, you also have shorts moving underneath. Now, that we made a higher peak, that usually gives cause to believe that we're going to get a return back to the ABM yellow. We had a nice little intraday pop with the fade that kind of returned to a neutral stance. Steel, meaning short-term buyers, have been completely reset and we're almost out of positive extreme. Not quite. So it's sort of a mixed bag at this particular point. We're just kind of moving stabilized, but you've almost reached a level here where breaks below the ABM yellow. I wouldn't be afraid to move out of it and into potentially a short position. I think it's even weaker on the NQ as you've gotten the break above with the cross. That's what I would consider as a warning sign, and then I would just be looking for move up of cyan or continuation lower. The fact that you have a steel reset, it's helpful and powerful, but it's below the 13.5. It has to move back above to stabilize things, justify that. But it's breaking down a little bit faster on its shakeout, the opposite momentum that you have from the S&P. So a little bit of a divergence is building there, and that could be some rotation going. The euro move has been just dramatic, and this is something that's not opposed by the Trump administration from the standpoint of the idea of lower dollar means you sell more product overseas. And it also helped S&P companies that deal with overseas for transaction conversions for earnings. So it has its effects, but it's an indication that there's an expectation there's going to be significant inflation in the U.S. with potentially the Fed going slower is my view of it, being behind the curve, because that's really the only way to get out of the debt that the U.S. is in, is to inflate itself out of it. And now that you've moved from no growth to higher growth, there's no way they're going to be able to maintain the low interest rates. It just isn't going to be possible. How much impact that will have on the economy? Well, if you get it hot enough, you can raise rates, and it's not going to be as dramatic an impact early on. So we'll see how that bears itself out. But that looks like the plan. That's also going to send treasuries continue lower. We still expected them to be way down below this 120 level anyway. So, while some people think it's extremely oversold, I don't think so. And look at that. That's the move of oil moving higher to compensate for the devaluation of the dollar. That's a little more complex concept, unrelated to production, things like that. But devaluing the dollar, increase in gold, really usually results in oil prices moving a little higher because often they're traded for euros. And then you have, of course, China creating its own petro exchange using the Chinese yuan. So it's some interesting dynamics developing, and people are starting to wake up to the idea that, oh yeah, by the way, precious metals skyrocket. You would think that you would get more of an inverse trade from the pair concept of the Bitcoin and the other cryptocurrencies, but they've held up pretty decent despite that. I mean, fine, they're off 50% from their lows, but their highs, a little bit off of the lows now, and probably going to experience some consolidation within there until things stabilize a bit, but that's a significant move on gold. Let me feed back just a little bit, but it's been maintaining this pretty solid trend for a while. It hasn't eased the overbought that I was looking for a little bit better than it has, so it's going to have a little more volatility. Let's shrink that action, because we put up these charts from the other day of that same warning I was talking about that develops there. Then you get the full DOC spread where your short signal came in, but you can see the little bit above that 15 for the ABM yellow right there. I mean, not the ABM yellow, but the shakeout yellow. And then when it actually breaks down the histo below the 15 line is a clear signal. But that same point too, you broke the ABM yellow, converted to the red, and then the full-on DOC spread came right after it. So a little bit earlier call from 5K, and then that was a significant dump with no reset of the steel, suggesting retouched that low, and in fact made new lows. I mean, it got overbought as soon as it got just to the 23%. Right in here, you can see it from the extreme, and then made the new lows, and then reset, and then boom, popped above the 13.5, beautiful yellow candle, and then it shot all the way back up, because you have the declining highs on the flat low usually calls for a move back up to the highs, and in this particular case, that's exactly what happened. Likewise with lower lows on flat high, new lows. So all in all, worked out just fine, and once we got above the 50%, it's pretty much stagnated across the line there, but supported off of it entirely, and now we've popped up to new highs. So even if we get a new rising low, it's not going to call for a pullback as long as new highs are being made. So still fairly decent at this particular point, but it's early. I mean, this is, we had that nice pump the previous day in pre-market that then faded. But I think there's a lot of excitement about Trump being in Davos, and more happy talk about economy, potential infrastructure was discussed. So some of these rhetoric things popular and could lead to additional growth. The question is, how much do you want to pile on all at once? That's an interesting one, because you just create bottlenecks. So if the economy is moving at the steam that it is, do you really want to throw in additional infrastructure and really push the labor market to drive inflation? That'll be interesting, because if they choose that policy, then you know that it's about devaluing the dollar to help ease off the debt. And that'll be an interesting one to follow. As always, though, I will put up charts that are relevant. Trade well.